Well, in financing, there are 5 categories, otherwise known as the 5 C's of funding, which we're going to review. The 5 C's of financing are first, character, capital, capacity, collateral, and conditions. Let's take a closer look at character first. Your character, sometimes called your credit history, is the first C, and it refers to a borrower's reputation or track record for repaying debts. This information appears on the borrower's credit reports generated by the 3 major credit bureaus, Experian, TransUnion, and Equifax. Credit reports contain detailed information about how much an applicant has borrowed in the past and whether you have repaid your loans on time. These reports also contain information on collection accounts, judgments, liens, and bankruptcies, and they retain most information for 7 years. The Fair Isaac Corporation, or FICO, uses this information to create a credit score, a tool that lenders use to get a quick snapshot of credit worthiness before looking at credit reports. Let's talk about the second C, which is capital. Capital is the down payment or deposit a borrower puts towards a potential investment. A large contribution by a borrower decreases the chances of default. For example, borrowers who have a down payment for a home typically find it easier to get a mortgage. Down payments indicate the borrower's level of seriousness, which can make lenders much more comfortable in extending credit. The third C is capacity. Capacity measures a borrower's ability to repay a loan by comparing income against reoccurring debts and assessing the borrower's debt to income, or your DTI ratio. In addition to examining income, lenders look at the length of time an applicant has been at his or her job and job stability. The fourth C is collateral. Collateral can help a borrower secure a loan. It gives the lender the assurance that if the borrower defaults on the loan, the lender can repossess the collateral. For example, car loans are secured by cars and mortgages are secured by homes. The fifth is conditions. The conditions of the loan, such as the interest rate and the amount of principal, influences the lender's desire to finance the borrower. Conditions refer to how a borrower intends to use the money. For example, if a borrower applies for a car loan or a home improvement loan, a lender may be more likely to approve those loans because of their specific purpose, rather than a signature loan that could be used for anything. So in a nutshell, the 5 C's again are character, which basically speaks to your credit history; capacity, which is your DTI or job stability; capital, which is the amount of money you can make in a deposit or a down payment on the loan; collateral, which is what you're able to use as an asset that you can use to secure the loan; and of course, conditions, which speaks to the loan amount, the use of funds, interest rate, and the term.